I had to come on the show because it was a SaaS apocalypse. And then, we lived through the 2020 SaaS apocalypse when you're like, oh, how are you going to survive through the pandemic? And here we are, Jim. We're in another SaaS apocalypse. It's a series of SaaS apocalypses.
Could we talk about software, which is trying to make a bit of a turn today? Some, looking at the price action in some of those names and saying, well, maybe we're trying to put a bottom in.
Right, guys, so diving right into it, we can see the stock has had a major pullback down. It dropped to 43% and then it slightly pulled back now, 39% down at the time of recording. Now, looking at the kind of overall price action of the stock, people may say, okay, this is a crazy pullback, which it is, but really we can see common price levels at 384 per share, 422 back in 2022, 2023. So it is a huge pullback, but as we know, and as I mentioned in the intro, it's part of a wider pullback in all SaaS stocks, which I think is actually a positive. Because if it was just one stock, there's usually something fundamentally wrong with that specific stock. In this case, what does Intuit do? So Intuit is basically a tax accounting software. So they have TurboTax, they have Credit Karma, I believe, and a few other different platforms. Now, these are used by people to solve the consumer problems and the business problems. So this can be to make ends meet, or get, grow, manage customers, get paid and pay bills, maximize tax refunds, pay off debt, be compliant, and reduce any excess payments. Now, the market size for this type of financial accounting software is a $300 billion market, and the company only has a 6% penetration despite being the market leader. Now, the platform advantage, so they currently have 86 million consumers on the platform, 70,000 tax and financial attributes per customer. So you might have always heard about what is the advantage of a company using AI if all the LLMs are commoditized. Well, the key word is data. And any company that has unique, specific, and proprietary data is in a huge advantage in terms of its position relative to other companies. And Intuit is one of those companies. Even the major LLM providers, OpenAI, Claude, they don't have this level of data. They've literally just scraped the internet, unless they've got specific partnerships with financial institutions, which some of them have started to do, including Intuit has recently partnered with Claude, and a total of 18 million US workers get paid annually via QuickBooks payroll. So in terms of, as mentioned, this company is deeply embedded into the financial accounting payroll workflow of a huge number of US businesses and internationally. So the fact that Wall Street has sold off a lot of tech stocks because of fears of AI disruption, with this particular case, it looks to be overblown. Now, in terms of Intuit's latest earnings, so the stock sell-off happened before earnings were announced, and then earnings were announced and everyone was expecting, okay, earnings are going to be bad, but they were actually good. So the company delivered second quarter 2026 revenues of 4.65 billion, up 17% year over year, and ahead of consensus estimates of 4.53 billion. Global Business Solutions generated 3.2 billion in revenues, up 18% year over year. Excluding MailChimp, Global Business Solutions revenue increased 21%. Now, the consumer segment delivered 1.5 billion in revenue, up 15% year over year, and Credit Karma revenue increased 23% year over year, while TurboTax grew 12% year over year. The company has a fortress balance sheet with $3 billion in cash and investments, which provides ample liquidity to fund operations and initiatives. Its debt is quite high at 6.2 billion, but the company is in a strong cash position and cash flow position, as repurchased $961 million of stock, with $3.5 billion remaining under its existing authorization. So buybacks are equivalent of returning cash to shareholders. Now, in terms of valuation, I've got a DCF cash flow valuation, looking at a variety of different calculations. Now, I won't show you the back end of this, but basically this is, on the base case, it's predicting 12 to 14% compound annual growth rate, a free cash flow margin of 30%, and terminal growth of 2.5%. The base case is 650 to 700 per share. And keep in mind, 12 to 14%. That's similar to what they have guided for, as mentioned here, 12 to 13% growth. So it's quite a reasonable estimate in terms of 650 to 700 per share. And if we dive into the technicals, you can see the stock, yeah, it's slightly pulled back, but it's still $400, way below the valuation, which would bring it at 650 right here. Now, on the technicals, I've got what's called a Fibonacci retracement setup here from top to bottom. This helps to identify various different support levels. You can see there was a support level here at 366, and then that went back to 2022. Now, for full disclosure, guys, as mentioned on, if you see my prior video on options trading, I've switched to an options-focused investment strategy as it's much more valuable in terms of risk-reward returns. And if you want access to the options trading I'm doing for Intuit, feel free to check that out in the link below and express your interest. Okay, on to stock number 2, and we have Snowflake, the data warehouse provider, which focuses on the hybrid cloud setup. So, of course, we have Amazon AWS, which has their data warehouse system, Redshift. We have Google Cloud, which has BigQuery. And Snowflake has their own data warehouse, which is how they originally started. And the idea is people could use them across platforms rather than being locked in to a single cloud provider. We can see the stock actually plummeted 38%, so pretty substantial pullback. But the company announced earnings, and as you can see here, the company beat its earnings per share and it beat its revenue estimates. Now, I'm going to dive into this a bit more, as well as a little bit more on the business model. So again, discussing AI, Snowflake is a key beneficiary from AI as opposed to a company that would be disrupted. So it addresses the entire data lifecycle. And as anyone will know in the tech industry, without clean labeled data, AI is pretty much useless. So you need data organized all in one place, a single source of truth. And Snowflake helps with that. Now, this could be marketing data, this could be finance data, whatever type of business data a company has, they need to get it in one place. And that's what Snowflake helps with. So you can see, obviously, we have data sources. So it could be SaaS applications, databases, Internet of Things. The data gets streamed in, and we have unstructured data, which is usually stored in what's called a data lake, and structured data, which is usually stored in what's called a data warehouse. And then in order to use that data, you can do what's called business intelligence. So you can see dashboards, data science, etc. apps, all the big Fortune 500 brands, all the big consultancies, Accenture, all the huge big names are using the platform, Salesforce, S&P Global, Meta, Microsoft. So pretty much everyone is using this platform. Now the TAM, $355 billion, the TAM is expected to grow by from 170 billion today, of course, driven by even more so the AI boom. Annual product revenue, so 29% year over year. Now to put that into perspective, the company is pretty large. So this company is at a $57 billion market cap, $4.4 billion in revenue, so 29% year over year. Now, there's not many companies that are growing at that type of pace at this type of size. So that is definitely a bonus, and that the stock has pulled back on. So the customers of high quality is definitely a value add. So customers over $1 million in product revenue, and this often creates lock-in, as these large enterprises are very slow moving and they often don't switch very easily. Hence, we see a 125% net revenue retention rate, which means customers are not just buying the platform, they're expanding into different products and services. Interesting to see that the company is hiring when a lot of companies are actually reducing their headcount. Now, some could say that's a positive sign, it means they're growing. Others could say, why aren't they replacing more employees with AI, which seems to be the current trend. But maybe they're just being realistic. Just touching on the valuation. So as I mentioned, we have a DCF cash flow here. Revenue growth, and the base case is assuming 18 to 20% revenue growth. Long-term free cash flow margin, this would be GAAP adjusted 25%, discount rate 9%. So $210 to $230. Now let's see where we're at. So we're at 168. So we're way below the base case fair value. Now, in a worst case scenario, we're kind of touching on the worst case scenario valuation. And in the bull case, we're substantially below at 280 to 320 per share intrinsic value. Now let's look at the technicals. So as mentioned, I've got Fibonacci retrace here. This helps to identify certain support levels. And we can see it did, I would say, break through this support slightly here. So one would expect it to have continued to fall, but again, these support lines often have a range inside, so perhaps it's still in the range. If you guys see my previous video, I've recently transitioned over to options trading, and I've built a custom AI system to help people like you trade options for equivalent of passive income, just a few hours per day. Now, this has the potential to earn between $15,000 and $20,000 per month, which is not something that I often say, especially on this channel and with all the noise in the market. But it's a very valuable strategy, and there's a few other strategies that I use with regards to options. So for those interested, I'll leave a link to the first video I did on options below, or you're welcome to just fill in the expression of interest form. And if interested in seeing what type of options I may be buying for stocks such as these and stocks such as other stocks in my portfolio, then check that out. And yeah.
Feel free to join the community by hitting the subscribe button and of course the thumbs up, and let me know what you want to see more of, and I'll see you guys in the next video.